Bloomberg Audio Studios.
Podcasts, radio, news.
This is Bloomberg Businessweek with Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody. Well, our Bloomberg News team reporting that the House Judiciary Committee said it's found, quote, substantial evidence of collusion and anti-competitive behavior by the financial industry to impose radical ESG goals on U.S. companies. An interim report published by the Republican-led committee said, quote, a cartel of financial firms and climate activists sought to replace ExxonMobil board members in 2021 after the company declined to make a series of climate pledges.
Here's what Jonathan Maxwell has to say about this and sort of the changing tone of ESG over the last few years. He's founder and chief executive officer of SDCL. It's short for Sustainable Development Capital, LLP. SDCL has more than $2 billion in assets under management. He's also the author of The Edge, How Competition for Resources is Pushing the World and Its Climate to the Brink, and what we can do about it. Jonathan joins us here in the Bloomberg Interactive Broker studio. Welcome. How are you?
Thank you so much for having me. I'm great.
Thank you. Well, we're going to talk about sort of what competition for resources is doing, because it's super interesting. But I'm curious about your thoughts on the way that ESG has sort of turned into this four-letter word over the last few years. You see what's happening in Texas with the attorney general there. What do you make of it?
I mean, the trend's been going on since about 2022. It's actually, I've got a whole chapter in my book about greenwash and ESG. And there was this was after a very big period of assets being gathered in ESG funds, like a huge boom in sustainability ESG. And then the tide turned. But there is something. I mean, my company's called Sustainable Development Capital, SDCL, so I'm kind of in the business. But there is something there where, if you're in the business of sacrificing returns on the altar of the environment, this is the sort of the financial and sort of intellectual side of the story, then that is against the fiduciary duty of the fund manager and of the pension scheme manager. And I think there's a lot of noise running around this sector, but the idea that you should take capital from capital that needs to be invested for financial return and sacrifice or compromise the job of investing, I think is a very challenging area. By the way, I don't think it's necessary. I don't think not only necessary, I don't think it should be done. And I think that investors will get sued and companies will get sued for doing it. And I think it's as
simple as that, isn't it?
It really is. And when I think about sustainable, my company's called Sustainable, but it doesn't say giving money away. It says sustainable means for me commercially sustainable. In fact, if it's not commercial, it's not sustainable.
Didn't we get lost? I keep thinking about this. When ESG came out, I think we all thought was about doing good. And it really was about environmental sustainability and governance issues, right, that could financially impact a company. Right. And then you have things like impact investing or something. That's a whole different thing, right? Like, tell us a little bit about how the world is evolving and how we look at this. Because if we, investing to do good versus, I don't know, like, help me out here to kind of understand where this space goes.
I think that I'll give you something that's a little bit optimistic, because we talked about resources and the rest of it. So, I think we're currently in a very hardline environment, right? What do I mean by that? The political headwinds are against it. You've got, let's say, a pushback against climate or woke capitalism. You've got regulators and you've got local.
Meanwhile, the world is kind of burning around us.
Right. Yeah. But I'm just giving you the headwinds to start with. I'm not going to give you a tailwind in a second, pretty substantial one.
Sorry.
Right. But we're also under serious economic pressure, right? And we've got inflation. We were talking just before the show started about how inflation's partly driven by energy prices. So, it's a difficult environment that we're working in. Okay. So what do we do about it?
Right.
You look at the problem, and here's the thing, and this is why I think that this is what I focus my investments on. When I look at what's wrong with the energy system, one of the things that stands out to me, and it's the same in food and water, is that most of it's wasted. I mean, it's very, very, very infrequent people actually talk about this.
Actually, we talk about, it's a lot about food waste. And here you have people who have no food, and then the amount of food waste, and then the impact that has on the environment. But forgive me, go ahead.
No, I mean, it's incredibly important. About half of the world's food is wasted. About a third of the world's water is wasted. So it wouldn't necessarily surprise you if I said that roughly 3/4 of the world's energy gets wasted. You break it down: extraction 10%, generation, because about half of the world's energy gets lost as heat, in the generation process. You put gas or uranium into a power
How
plant.
come we're not better with that?
Why? Because we've built a centralized energy system in America and Europe over the last 40, 50 years. We've vented heat, and then we build what's now old transmission and distribution lines. And you put it all together, it just doesn't make the sense that it did over the last 50, 60 years. We also now, and this is the exciting part, we also have solutions to this problem. I know it's astonishing, but we actually have solutions to this problem. Part of the problem is you generate energy in one place and then you use it in another. And then we keep talking about grid, transmission lines and the rest of it. What about you could actually generate the energy close to where you need it?
Because you don't want a power plant next to your house.
You don't.
I'll put a solar panel, though.
Right.
How about tap the earth?
Right. So you've got solar panels, you've got ground and air source heat, you've got heat capture, you've got underground energy plant. You say you don't want one. You've got one under this building. You're talking
about geothermal?
I'm talking about cogeneration, actually. So the first asset that Michael Bloomberg put in your new office when you opened it in London was a cogeneration system, because he knows that your combined electrical thermal efficiency standards mean you can operate buildings much more efficiently if you generate the energy where you need it. So the short answer is the world's biggest problem is that most of it's wasted. The world's biggest solution to climate change, to economic performance and competitiveness, and the cheapest is by decentralizing the energy network, bringing energy generation to the point of use. And the other thing that Michael Bloomberg did for Bloomberg was actually change the infrastructure inside the buildings so it doesn't waste. And so about 30% of America's buildings leak energy out of the windows through lighting, heating, ventilation, air conditioning. Change the lights, change the heating, ventilation, air conditioning, and it transforms the energy system. So to come back to the ESG, ESG is well-meaning, impact investment is well-meaning, but what if you can start to make investments that are not only more competitive, cheaper, cleaner, more reliable, but actually drive the economy? And that is what we focus on.
Isn't it, from a building perspective, isn't it more expensive to do those things?
No, I'll give you a very, very quick example. The classic one is taking LED lights. I know it sounds a bit like everybody's done it, they haven't. You take a 60-watt lamp, you replace it with a 6-watt lamp. You can do the math. It's 90% less energy to do the same job, even if the light bulb costs you 2 or 3 times more money.
And the bulbs don't get hot.
The bulbs don't get hot, and therefore you don't need the cooling to cool the room down again. The payback period's 2 or 3 years. So the cost is, what am I paying for over what period of time?
Jonathan, why does it not happen quicker?
So I write a lot about this subject.
Yeah.
I wrote a book about it. I write a Substack.
Is it because the establishment doesn't want it to go fast?
My answer to the question is it's actually the perfect problem. What I mean by that, and the energy system is filled of brilliant companies.
Yeah.
Everybody in the supply chain is brilliant at what they do. You have an extraction firm. They do a great job. They vent gas and flare it. It gets complained about, but it's economically, they figure it's the best thing that they can do. You build a power plant, a nuke or a gas power plant. They're operating as economically efficiently as they could and should do, right?
Right.
But you have a transmission distribution line. It's economically, it's perfected to its particular
Those
shelters.
distribution line people don't want it to go away.
But you put it all together as a system, and it doesn't make any sense at all. So each component of the supply chain or value chain for energy is, this is why I call it the perfect problem, perfected for its shareholders, but you knit it together and it doesn't make any system sense. And that's why decentralizing energy, bringing it to the point of use, is a fundamental different approach to making energy.
As we've learned here in the U.S. with the problems that the Texas power grid faced a couple of years ago, we're on an aging infrastructure here, and it's sort of this patchwork where things are different in each state, and when you cross state lines, things change. How do you make it work in a place like the U.S.?
So we've invested well over $1 billion here in the U.S. I'm excited because Donald Trump says if you invest in more than $1 billion in the U.S., you can have all sorts of good things, and I'm looking forward to that.
Wait till January 20th.
Yeah, so our $1 billion has gone into exactly this, right? So we own a very large energy system in upstate New York, in Rochester. When it gets very cold, and it will over the next couple of months, the grid struggles to provide energy. We don't, because we generate the energy on site for our customers. So, state by state, we build resilient on-site energy generation solutions. We own it through a public company that we manage in London. We have other systems here that do rooftop solar nationwide. We own a company called Onyx, which does nationwide solar and storage. Again, resilient, on-site, clean power that's cheaper than the grid.
So, I mean, again, the big step of how we get there, because I always talk about the establishment, the old systems that are in place. Yeah. It's really hard to break them up. And there's also a lot of money involved that people will lose if those are broken up. So how do we get there? Is it government policy that incents people once again, or companies, or like how do we get there? Or does it just evolve?
I think this is an evolution rather than a revolution. It sounds a bit trite, but it's because the systems that we build, for example, that are on site are of benefit to the utility. I'll give you a great example, something we were talking about earlier as well.
Yeah.
Take data centers. Data centers are a tremendous user of energy all day, all night, and all year, hundreds of megawatts of power demand. Where do you get it from? You normally get it from the grid, but the grid struggles to provide the power that you need for new data centers. So we have a business which focuses on building power for data centers, but it's also providing services to the grid. So, we're providing a solution to both the local grid so that we can provide firm grid capacity and picking up the juice requirements from the data centers.
How's that power being generated for these data centers?
So we generate power 24/7 using natural gas cogeneration, but we integrate renewables and storage to make sure that we can get the lowest carbon footprint, the highest level of reliability, and the lowest cost.
I do wonder in terms of oil and renewables, we just got 20 seconds. Renewables, do we continue to move towards renewables?
Yeah, but again, why build them in the middle of nowhere when you can build them on site? Do both at least, and I think this is the point I make. Let's be efficient at the same time.
It's like nearshoring and onshoring for everything, like in our backyard, right?
You have the Department of Government Efficiency of the US. If it looked at how much energy is wasted, do you know how much the cost of energy is in America? $4.5 trillion. If 2/3 of that's wasted, you could save $2 trillion a year. That's what Elon Musk
Jonathan
should look
Maxwell,
at.
we're running out of time. Come back soon, though. We want to continue this. This is Bloomberg. We want to talk about the global perfume market. Size was valued at around $40 billion in 2022, projected to reach more than $64 billion by 2030. And the market is expected to grow at a significant rate due to the growing demand for chemical-free perfumes, which is kind of interesting. We are so curious what our next guest has to say. This is from Zion Market Research. She knows a lot about the fragrance world. Great to have back with us Linda Levy. She's president of the Fragrance Foundation here in our Bloomberg Interactive Brokers studio. Happy holidays. How are you?
I'm good, Carol and Tim. It is great to be back with you.
Aw. So tell us about your world and what is going on.
My world really smells good these days. Let me tell you, since I saw you last, something has a few things significantly changed. And that's why I asked about your son. One of the biggest things, and we are having terrific growth, we think in the U.S. it's going to be we predicted about 9.5 million. And according to whoever you read, Black Friday was up about 11%.
Wow.
Cyber Monday was up 7%. But in the world, and I have retail in my background, it could just be a shift. You don't know till it's all over. So we shall see, but we're very optimistic. The reason I brought up your son is that the biggest change is young people have joined the fragrance consumer population, but it's two different types. The young girls who are dragging their parents into Sephora and otherwise are very interested in body mists or hair mists, brands that did not even exist possibly to the extent they do now. When I saw you last, Sol de Janeiro, there's an adorable one, Love Shack Fancy, Nest New York is doing it. They're body sprays. Most of these are less than $50. So they're coming in with a lighter version of fragrances, new format, and they're very attracted to it, as well as hair mists for the girls. For the guys, I am not exaggerating, at about 12 years old, the teenagers and so on, they have joined fragrance users. They, however, have a different approach. They want the brands that have the real designer names. So from Chanel, Dior, Armani, Ralph Lauren, Tom Ford, they're really status seeking. So these young people joining, very big change. And the other thing I was thinking about sharing with you is, it used to be everyone had a signature fragrance. One fragrance that your aunt, your grandmother, or your father, or whomever really was identified with.
My mom had a signature fragrance.
Do you remember what it is, Carol?
Yeah, it was Estee Lauder, and it was Youth Dew.
Okay.
Old one.
No, that's a classic.
It is a classic. I actually have a bottle of it that my daughter bought me for,
Okay, that one's true to my heart. And that's a great example. Youth Dew, in fact, invented by the Estee Lauder, started out as an oil and became a fragrance. And Estee Lauder herself was revolutionary. So we're perhaps your mother or grandmother wore that.
Yeah.
They now, instead of one signature, have collections. So this is another big change that's fueling. So for a different occasion, you wear a different outfit. If you're going into Bloomberg studio or you're going out to a nightclub, you want a different mood, a different feeling. So we do still call it the invisible accessory. No fashionista is, their outfit is not complete without it. But the difference from one signature to a collection has really changed things up.
I have to tell you, I think about, listen, I'm a nutcase with hand cream, and like I'll put this on and people are like, what's your fragrance? But it's amazing the importance and value of fragrance in so many different products, like something like a hand cream.
No, but hand cream, shampoo, deodorant, so many lotions, oils. Is another thing is a lot of different formats are out.
Yeah.
And just like you're saying, the smell of that on your hands is your signature perhaps today, Carol.
Yeah.
One thing that I did want to ask you about is we're seeing increased reports about concerns over ingredients in certain fragrances. I saw recently in the Washington Post a piece by a doctor who talked about phthalates that are found in popular perfumes, nail polishes, hair care products. They've been linked to some adverse health outcomes, insulin resistance, cardiovascular disease, impaired neurodevelopment. How is that taking shape in the industry right now?
I would say the ingredients are heavily regulated, and anytime something is identified as medically unsound, it goes off the market. That's why sometimes it is not known when it was originally formulated, and when it's identified, I think the industry is extremely dedicated to keeping the consumers very healthy and feeling okay. That also connects to some people think naturals are better than synthetics. But think about poison ivy, if I may.
Yeah.
Naturals are not necessarily more safe. And in fact, most fragrances from the days of Chanel No. 5 were created with synthetics. So I do think it is safe out there. And there are a lot of different ways that people talk about ingredients, but I don't think the U.S. consumer should have a concern.
I was using a wash. It was like for hand washing different things, and it was supposed to be natural ingredients, and they did a major recall because they had problems because of some of the natural ingredients maybe don't have the same kind of keeping out dangerous things. Yeah,
a recall for that.
I won't even say what it was, but it was a major.
Wild.
It was like fabric spray and so on and things like that.
It wasn't carrots; those got recalled.
It wasn't carrots; they got recalled too.
Okay.
You mentioned Estee Lauder, and I think about brands and companies, iconic brand. They're going through some difficulties, and fragrance was such a big part of their world. When you look at companies, there's so many upstarts, new companies. I don't know. Tell us about the industry and where it goes, and the companies you've been watching or thinking about a lot.
Certainly. Estee Lauder is very close to my heart because I was there for 10 years.
Yeah.
I would say the changes they're going through have affected others, and most of them have right-sided themselves by now. So before the pandemic, there was a great opportunity. There was great new territory to sell fragrance, and that was in Asia. So between China and what goes on with the United States, and it was the next place to go. In the Asian populations, for centuries, fragrance was not a big piece, and that was really changing. So for a lot of companies, the beauty business, skincare, et cetera, have been affected by Asia. The big companies that are really doing fragrance continue to be Estee Lauder. Besides Estee Lauder and Clinique, which has Happy, they do own Tom Ford, and they do sell Le Labo, Frederic Malle, et cetera. Prestige is doing well. L'Oreal is really killing it these days. They have reinvigorated brands like Valentino and Prada, so they are going strong. LVMH, I need not tell you, Mr. Arnault is very aggressive about his prestige
We did a little cover
luxury.
story here at Businessweek.
Yeah, well, we love him, and what we really know is he believes in brand identity, quality, and he is big in the luxury space.
Do you have a favorite fragrance, or can I not even ask you? 5 seconds.
Okay, I have at least 5. Guerlain is really one of my faves. The Estee Lauder Tom Ford is absolutely my fave.
Wow.
Prada Valentino from L'Oreal. Carol, I have a very big collection.
Linda Levy of the Fragrance Foundation. She is president. Thank you so much. Happy holidays.
Happy holidays to you too.